Look at this. Kevin O'Leary said Americans could survive on just $500,000, but that was 2 years ago. Could you manage in 2025? I'm going to suggest that you absolutely can, because there's YouTubers on YouTube that have suggested that you could have even less money if you do certain strategies. They are tied to the stock market, but you absolutely could. But he has said, this is what he said, in 2023, Shark Tank host Kevin O'Leary made a surprising claim on YouTube. With the right investments and a modest lifestyle, a person can live comfortably on as little as $500,000. It's all about lifestyle, he said. You can live off $500,000 in the bank and do nothing else to make money. He went on to explain that investing this money in a relatively safe fixed income security could deliver as much as 5% in annual returns, while the stock market could deliver up to 9%, which would be enough passive income to live a modest lifestyle. At the time, YouTube comments were quick to call him tone deaf for suggesting that people could live on as little as $25,000 a year. 2 years and several rounds of inflation later, O'Leary's math looks even less realistic. Here's why. No room for error. At first glance, O'Leary's suggestion doesn't seem outrageous. As of September 2025, the 30-year U.S. Treasury bond offers a 4.9% yield. Investing $500,000 in this ultra-safe asset would deliver $24,500 in annual income. Depending on your location and lifestyle, that amount may not be comfortable, but it is roughly 56.5% higher than the poverty line for individuals in 2025, according to the Department of Health and Human Services. Meanwhile, the S&P 500 has delivered a compounded annual return of 14.7% since 2010, according to Vanguard. If you invested $500,000 in a low-cost index fund in 2010, you could have enjoyed an average annual return of $73,500, well above the median individual income of roughly $62,000 in the second quarter of 2025, according to the Bureau of Labor Statistics. It might seem like O'Leary's thesis is justified, but these calculations make several assumptions, some of which are unrealistic. For instance, $24,500 is above the poverty line if you're living alone, but nearly at that threshold if your household includes 2 or more people. In other words, a couple living on a fixed income from $500,000 would technically be poor. Investing in stocks instead of bonds, as O'Leary suggests, could be a solution. However, this strategy leaves little room for error or volatility. Even a handful of bad years could derail your financial plan. Let's say you invest $500,000 today and experience a negative 10% return in your first year. Also, because you're depending on this money to meet living expenses, you withdraw $50,000 during this bear market. At the end of the first year, you're left with just $400,000. Even if you earn 10% a year, every year going forward, your annual income would be just $40,000. In other words, 1 year of negative returns can permanently reduce your passive income. These calculations also leave out other important factors such as taxes, inflation, and the lack of compounding growth because you're withdrawing the entire return every year. It's safe to assume that retiring on $500,000 in 2025 could be possible, but potentially unsustainable over the long term. This is why it's important to include a margin of error and aim higher. Save more, withdraw less, because stock market returns and even interest rates or on government treasuries are unpredictable. You should probably aim to withdraw less and save more. When Bill Bingen developed the famous 4% rule, he looked back at historical returns for a balanced portfolio over 50 years to find a withdrawal rate that was low enough to sustain a nest egg for roughly 30 years, according to the Corporate Finance Institute. Bingen's calculation have been tested, which means this rule works even if an investor experiences some economic downturns or recessions. Actually, it has been found that 4% is a little bit high in today's environment, but they're not mentioning that. If you if you apply the 4% rule of the current median individual income of $62,000, you would need roughly $1.55 million to retire comfortably. That's 3 times higher than O'Leary's minimum threshold. Even if your lifestyle is modest enough for you to survive on $25,000 a year, you would need at least $625,000 in your nest egg. I would say, I knew there was a place on here. Let me turn it around here. I would say there is a way to do it. And like I said, I've seen and watched other YouTubers say that you can do it on way less, and still grow your account. But they're expecting only 10% per year from stocks. And there are ways that you can safely use the money. And if you want to learn more, you can, we can go over some things and look at it. But I just wanted to share with you, even back then, he said $500,000, you could have a retirement plan that works. I mean, you got to consider, okay, when are you retiring? Are you doing it when you're getting Social Security too? Because he may be basing it on 65-year-olds who have Social Security as well, and they have their health care taken care of with Medicare. I did not see the show, and I don't know what he was talking about. If it's somebody who is young, I mean, depending, you could go on that $500,000 and maybe live in another country, and you would be living like a king. He did not mention any of that. So anyhow, just wanted to mention that to you. Go down, and if you want to get more information like this, you can go to Michelle Morar and sign up, subscribe, and you will see whenever I am giving you information. See you later.